Welcome back to Future Digital, the one channel you need to learn everything there is to know about crypto in a very easy way. Plus, we make it fun. In our last episode, we talked about what a bear market was and how to maybe see when it was ending. Remember, a bear market is basically when stocks have dropped 20% and a recession might be just around the corner. It's not fun when this happens, of course, especially not if you're an investor, and especially not if you're a crypto investor. But the silver Bitcoin lining is that it pretty much always does, bounce right back. The trick is just recognizing the signs of when it's time to start investing again. And that's what we'll talk about in this episode. Let's start with a definition. What's the opposite of a bear market? A bull market. That's why there's a bull statue right up the street from the New York Stock Exchange, right in the middle of the financial district. And of course, right across the street in front of the Starbucks is a statue of bullshit. A bull market is a market where prices are rising or are expected to rise by 20%. This comes after a bear market, so at this point, we've still got a way to go for this to happen. Be patient and take advantage of this time to learn. But be warned, bull markets are usually followed by another bear market. Look at what happened in 2007 and 2008. Now, of course, it's difficult to predict when exactly this will happen, but it does depend an awful lot on optimism, confidence, and expectations. These are all feelings, emotions, proof once again that economics is in large part based on human psychology, which I've said a few times now. A large part of the study of economics focuses on trying to quantify or put into a mathematical equation the way people feel. That's one reason economics is hard to study. I mean, let's think about it. I walk into a restaurant and I have no idea what I'm in the mood for. However, people with more experience who actually work in this restaurant might be able to take a look at what I'm wearing and if there's a spring in my step or not, and recognize that usually people in this specific mood and wearing these specific types of clothes usually end up ordering a turkey sandwich. Of course, that's not a perfect analogy, but it's an example of probability. Statistics. Statistics exist to chronicle past events in an attempt to predict the future. Just like eventually Earth will be hit by another massive asteroid again, wiping out most life on the planet. And Yellowstone will also erupt again, wiping out most life on the planet. And either liberals or conservatives will control all three branches of the US government at the same time again, wiping out most life on the planet. Another term to look out for in predicting when a bull market is going to happen is market sentiment. This is that very attempt to quantify human feelings in terms of economics. Now, there's a guy named Yves Lamoureux. Look him up. Can we get that name on the screen? Thanks. This guy says that Bitcoin is the king of crypto, and he's not wrong in that while other cryptocurrencies will have a hard time bouncing back, Bitcoin will not. He is even predicting that Bitcoin will reach $100,000 by the end of 2023. You know what that sounds like to me? Confidence. A lot of other prominent analysts and investors are predicting this could happen in 2024. That's relatively the same time period, so let's assume they'll all be right. What's interesting here is that they're also predicting what's called a halving event, like cutting in half halving. This means that it will once again become even more difficult to mine Bitcoin, making it more scarce and more valuable. A perfect example of supply and demand. So basically, to sum up, a bull market is when stocks rise 20% or more after a bear market when they fall 20% or more. You know, a bull market might be about to happen if prices start going up without too many corrections along the way. This means little negative fluctuations in price. And when market sentiment is generally positive and optimistic. I am not a financial advisor. I just like talking to you. If you need financial advice, ask a professional. Crypto trading isn't for everyone after all, and a professional advisor can help you determine if it's right for you, and if you'd enjoy it. Future Digital is coming to you from Tallinn, Estonia, the crypto capital of the European Union. Every episode, I like to share a little bit of information about Estonia, so let's go. Estonia sits on the Baltic Sea, along with Sweden, Finland, Russia, Latvia, Lithuania, Poland, Germany, and Denmark. Some of these are called Scandinavian countries, some Slavic countries, some are Baltic countries, and some are Nordic countries. So many labels. I've lived in Estonia for 24 years, so I'm fairly familiar with where I live. And I have always noticed that Estonians can't really decide what they are. Are they Scandinavian? Nah. Are they Baltic? Nah. At least Estonians don't really like to be called that. Are they Slavic? Nah. Nordic? Well, that depends on which dictionary you're using. A regular dictionary where definitions don't change, or the Wikipedia. Personally, as no one asked my opinion, I would say that Estonians are, wait for it, Estonian. Estonia is an Estonian country. But I'll let you all decide in the comments. If you like what you've seen, then don't forget to like, subscribe, comment on our videos, share them with friends, and enjoy a sense of humor if you have one. See you all very soon for our next video here at Future Digital.